get started with the show, but first up, let's take stock of how the market is shaping up right now. As far as Nifty is concerned, we are seeing a solid recovery from the day's lows. Like, look at if you can pull up the charts, it's a recovery of almost a percent coming in on Nifty right now. We are at 24,940 levels. In fact, we are hoping to touch those 25,000 levels. We are very close to the 24,950 levels as of now. We have managed to recover percent from the day's lowest point on the Nifty. Ditto for Nifty Bank, we have managed a recovery of almost a percent on Nifty Bank as well. 55,894 is where we are perched at Nifty Bank. Sectorally also, if we see, Nifty IT has been holding the fort since get-go. Nifty IT is the top sectoral gainer, trading with gains of almost 1.8%. Nifty Metal is also shining in trade today. Nifty Realty also trading with gains of 0.7%. Now, Coforge within the IT pack has been an outperformer and continues to outperform. With Coforge, the mid-cap IT space doing well today. Coforge, Persistence, TechM, Emphasis, HCL Tech, they're all trading with gains of more than 1.5%. As far as the broader markets are concerned, if you can pull up the mid-cap and the small-cap charts as well, mid-cap is trading with gains of 0.5% and small-caps is trading with gains of 0.3%. Recovery coming in on both the fronts. So right now at this point, Ashesha, we see a broad-based recovery that we can see, in the market in the second half.
Well, absolutely, and we've recovered significantly from the opening lows and we've reversed all of those losses that we registered in Friday's trading session. But before we get started with all the stocks that are buzzing in trade today, another fallout from the tragic Air India plane crash. Sources suggest airline insurance premiums will likely rise by 20% in the next renewal cycle. Anurag Shah is now joining us with the highlights of this news piece. Anurag, over to you.
So in Ahmedabad air crash, 95% of the liability will be absorbed by the foreign reinsurance companies, and Indian insurers will not suffer major losses in claim front. But as per our sources, in the next renewal cycle, the reinsurance companies will increase the premium, and that will have impact on insurance premium of aviation sector. So aviation insurance premium is likely to increase by 15 to 20% depending on companies, depending on their fleet size going ahead, because the aviation market is hardening. The rates in aviation markets are hardening in reinsurance space, and the rates will hike in the hull insurance for the war risk coverage and for the third party liability coverage in insurance space. So as in the Air India Ahmedabad plane crash, also the overall liabilities are expected to cross 2,500 crore, but majority of it will be absorbed by the foreign reinsurer. But going ahead, in the renewals, the premium will increase, and eventually the increase in reinsurance premium will be passed on by insurers to the aviation players only.
Okay, so aviation premiums are likely to increase by 15 to 20% on account of the plane crash that happened last week. Anurag, thanks so much for joining us with all those details. But let's get started with all the stocks that are buzzing in trade today. And on the technical side, we have Samit Chavan, Head Research, Technical and Derivative at Angel One, now joining us. And from the research desk, Kanishka and Rabinder, as always, are joining us. But first up, let's put the spotlight on oil-related stocks because they continue to remain in focus on account of the solid surge that we've seen in oil prices. And remember, after the 7% uptick that we saw last week, oil continues to trade near that $75 per barrel. All of these oil marketing companies, the likes of HPCL, BPCL, IOCL, are likely to be negatively impacted on account of surge in crude oil prices. But on the flip side, oil refiners, the likes of Oil India, Vedanta, ONGC are positively impacted, and this is likely to reflect in earnings going forward as well. So surge in oil prices, and this is clearly having an impact on oil-related stocks globally. All these stocks continue to be in focus today on account of this news piece.
All right, moving on then from the oil space, where clearly Brent crude has shot up over $75 a barrel mark, and on the back of that, these oil counters are in focus today, the OMCs. But coming to you, Samit, you've picked up TechM for us. Now, Tech Mahindra, in fact, the entire IT basket has been outperforming. In fact, the entire mid-cap IT names have been doing quite well for themselves. TechM on the charts, how does that look to you?
In fact, since morning, we have been witnessing good traction across the IT sector. Specifically, as you rightly pointed out, the mid-cap IT is doing well. And Tech Mahindra is the one stock, that that has been displaying some sort of strength since last couple of weeks. We saw this stock consolidating around 200-day simple moving average for nearly couple of weeks time, and toward the fag end of the last week, we saw a breakout happening from the important resistance of 1600 and 1620, and today clearly we are seeing a follow-up move, just important breakout. And now going ahead, there's a intermediate resistance around 1720, but it's not a major barrier as such. Sooner or later, we expect this stock to surpass this hurdle and move towards 1750, 1780. And we are quite upbeat on this stock. And as a disclosure, we have recommended this to our clients through call options, which is 1700 call options. On the lower side, if you see 1650, 1620 would act as a very strong support, and any pullback from current levels would be a good buying opportunity.
All right, so that's Tech M on the charts, but let's move on to another counter that is doing well in trade today, and that is HDFC Bank on the back of a brokerage note by Citi that has maintained a buy rating on the counter with a target price of 2,200 rupees. Now, the management has reaffirmed confidence that the growth and return on equity gap versus the peers is likely to narrow. The repricing of the EBLR portfolio is expected to weigh on the NIMs in the first half, though the levers exist to mitigate the impact in the second half. Now, NIMs are expected to improve over the cycle, and the bank aims to end the financial year 2026 with loan growth that's aligned with the system average. Now, growth will be driven by the SME, business, banking, retail, and the unsecured lending segments, with no expected drag from the corporate loans rundowns. Now, enhanced customer acquisition and maturing of newly added branches are expected to support the deposit growth above the system average, aiding the market share expansion. And on the back of this bullish note by Citi, HDFC Bank is in focus today, currently at the highest point of the day, trading with gains of 1%.
But let's shift our focus back to the IT sector, then TCS. There's some news flow over here. Rabinder, tell us, why is the stock buzzing in trade today?
Well, as TCS is in focus, where TCS has partnered with Denmark's largest retailer selling group to drive digital transformation and AI-enabled cloud migration. As its new strategic IT park, TCS will deploy its AI-enabled cloud operation solution, Cloud Experience, to drive sustainability and improve operational efficiency across selling groups and brands and markets. Additionally, TCS will support the retail group's digital transformation, focusing on enhancing the e-commerce platform to be more responsive to the evolving customer demand. So, back of this, TCS is focused, and TCS is up approx 2%.
Right, so that's TCS on the back of that news flow. But Samit, you have also picked out TCS for us on the charts. Tell us, what do you see again? You picked out an IT name, a large cap IT this time, but what's pencil in for TCS on the charts? Mute yourself, Samit. Samit, you need to unmute yourself.
Yes, thank you. So as far as TCS is concerned, it is we can clearly see that the entire large cap IT space is underperforming its mid cap peers. But now we are likely to see some sort of catch-up move from the large cap names as well. As far as TCS is concerned, this stock has been consolidating in a very slender range, and since morning we are seeing good traction in this counter. It's on the verge of a breakout, and it is likely that the stock is attempting to come out of its recent slumber phase. As a disclosure, we have recommended this to our clients through call option 3500 strike price. As far as levels are concerned, we expect this stock heading towards 3540 and 3570, which is the next important barrier. On the low side, there's a strong base. We can see around 3400, 3350.
Okay, so that's the view coming in on TCS, but shifting focus from IT to metals then, Vedanta. Kanishka, this one is in focus because the board will be considering first interim dividend for FY26. But tell us, what are the expectations?
Because it was supposed to hold a board meeting today to consider an interim dividend proposal. Now, this will be the first such proposal for the financial year 2026. In fact, the record date has been set for June 24th. Now, let's take a look at how the kind of dividends the company has given in the previous year. Now, Vedanta paid 43.5 rupees per share as dividend to its shareholders in 4 tranches last year. Now, in terms, they were 4 rupees, 11 rupees, 20 rupees and 8.5 rupees per share respectively. during the last year. Now, last week itself, Vedanta's unit Hindustan Zinc also announced its first interim dividend of 10 rupees per share for the financial year 2026. Now, based on its stake in Hindustan Zinc, Vedanta received a payout of close to 2,500 crore rupees. Now, let's see what comes out of the meeting today for Vedanta. But against the backdrop of this meeting, the stock is up over 1% in trade today.
Vedanta in focus on the back of that, but let's shift focus to the auto sector then. And Tata Motors, this one is a big laggard on the Nifty 50 index. In fact, the biggest loser on the Nifty 50 index today, down nearly 3.5%. This after the company came out with its guidance for JLR, and that is on the weaker side. As far as EBIT margins are concerned, earlier they've given a guidance of 10%, and now the company says that FY26 EBIT guidance could be about 5 to 7 odd percent. So from 10%, they've slashed their EBIT margin guidance for FY26 to just 5 to 7%. Apart from that, as far as their free cash flow guidance is concerned, that has also been revised to 0, which means they will not be generating any free cash flow for FY26 as far as JLR operations are concerned. And they say US-China tariff threat, BEV transition and China market outlook are the big threats going forward. So a big guidance cut that has come in for JLR operations, and the stock is declining on the back of that.
All right, so that's Tata Motors declining with the cuts of 3.5% on the back of that EBIT margin guidance cut for JLR. But moving on, something to figure, PI Industries, a mid-cap chemical name, which is one of the top mid-cap gainers also today, trading with gains of 4%. Tell me, what do you see on the charts for this one? Because there is a pickup. In the last few weeks, it has rallied almost 10%. This particular counter. So from here on, do you see this positive momentum to continue?
Yes, stock seems to have gained momentum gradually over the past couple of months' time. And now, with prices surpassing its 200-day simple moving average convincingly above 3900, 3950, the volumes have started picking up. So, looking at the combination of rising price and the volumes, we expect this stock heading towards 4350, 4400 over the next couple of weeks' time. The chart structure is extremely promising. If you look at the weekly, monthly charts, they are indicating a good up move in the near term as well. So any pullback from current level would be a good buying opportunity in case of PI Industries. Now, the previous resistance of 3850, 3900 would act as a very strong support, and any decline toward those important support zone would be a good buying opportunity in case of PI Industries.
Okay, so that's the view coming in on PI Industries, but we need to slip into a very short break on that note. We'll discuss many more buzzers on the other side of the break. Don't go anywhere.
पैसा लगाना है तो सेंचुरी प्राइम क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा.
Going with all the stocks that are in focus then, Indian Hotels is in focus on the back of a note by Jefferies, where Jefferies is maintaining a buy rating on Indian Hotels with a target price of 980 rupees. Now, they feel that the management has highlighted the scale-up and transformation achieved over the past 8 years. The company is focusing on the top-line diversification to hedge against the cyclicality in the hospitality sector. Now, Jefferies has reaffirmed a positive outlook on the demand-supply cycle in India's hospitality industry. The management has maintained double-digit revenue growth guidance for the fiscal year 2026. The company has reiterated its fiscal 2030 goal, which includes doubling its portfolio and consolidated revenues, expanding new reimagined businesses, and targeting an asset-light mix of approximately 75%. And on the back of this positive note coming in from Jefferies, Indian Hotels is in focus today. In fact, it is at the highest point of the day right now, trading with gains of 2.3%.
The stock is holding up to gains of in excess of 2% as we speak. That's Indian Hotels for you. But shifting focus to Bodhar Properties then. Rabinder, why is this company or the stock in focus today?
Well, as Godrej Properties in focus, the company has announced that it will develop a premium residential project on a strategically located 14-acre land parcel in East Bengaluru, and the proposed development is expected to offer approximately 1.5 million square feet of area with an estimated revenue potential of approx 1500 crore. So back of this, Godrej Property is in focus and the stock is up approx 1%.
All right, moving on to the next counter. Samit, you picked out Astral for us. Tell us what's on the chart for this one?
Yeah, as far as Astral is concerned, this stock was consolidating of late, but since Friday, we are seeing good traction, and the stock has already given a smart recovery from lower levels. It's on the verge of a breakout now. There's a strong support around 1545, 1550. In fact, there's a strong resistance around 1540, 1545. And the kind of price action that we are witnessing since morning, it appears that the stock is likely to surpass 1545 and then head towards 1600, 1650. So overall, the chart structure looks quite promising. On the lower side now, there's a strong base around 1400, 1450 for this count.
Okay, so that's the view coming in on Astral, but shifting focus to ITC then. Kanishka, what is the news flow over here?
That's right. This consumer goods giant has announced that it has completed the acquisition of Shrestha Natural Bioproducts for 400 crore rupees in an all-cash deal, making it a strategic entry into the fast-growing organic food market. Now, this acquisition was completed on a cash-free, debt-free basis with an upfront consideration of 400 crore rupees, as I mentioned, and a potential additional buyout of up to 72.5 crore rupees over the next 24 months, subject to agreed conditions, of course. Now, as part of the deal, SNBPL's subsidiaries, 5 elements in the US, Shrestha Global in UAE, have become step-down wholly owned subsidiaries of ITC. That's effective June 13th. Now, ITC says that this acquisition aligns with its strategy to strengthen a future-ready food portfolio and scale its presence in both Indian and global organic markets. Now, following the acquisition, the stock is up over 1% in trade today.
Holding up with gains of over 1% in trade, and that's the news flow for you. But shifting focus to Bajaj Finance then, and this is on the back of a corporate announcement that has corporate adjustment rather that has taken place on the stock, where the stock is now trading ex bonus in the ratio of 4:1 and ex stock split in the ratio of 2:1. So that adjustment has now taken place. The stock is currently trading at about 939 odd levels after this adjustment, holding on to gains of nearly 0.6% after the corporate adjustment.
Right, moving on to the next set of counters that are in focus today. It is the cement pack that is in focus today. In fact, it is on the back of a note that has come out on the cement pack by Goldman Sachs on the cement sector. Now, they feel that the cement prices have seen healthy increase in April and May despite the lower than expected volumes. This has led to an improved spreads and a sequential rise in the EBITDA per ton by rupees 120 to 200 rupees. Now, although the pet coke prices have increased by $15 to $20 per ton since December, there has been a subsequent cooling off. Now, despite recent capacity additions, pricing trends remain rather positive. Now, going forward, demand recovery will be crucial for sustaining outer year street estimates as the monsoon season approaches and the volumes soften. Market focus will shift to price behavior amid rising supply. On the back of that, cement pack is in focus today. ACC Cement, Ultrex Cement, Ambuja, all of these counters in focus on the back of that Goldman Sachs note.
So cement stocks in focus on the back of that, but let's put the spotlight on one stock in particular, and that is Ultrex Cement. Samit, tell us, what do charts indicate for this counter?
See, broadly speaking, if you see, this stock is stuck in a wide range, but within this wide range, there's an interesting price pattern that we can witness on daily time frame chart. Stock prices seems to have found support around 61.8% retracement of the previous up move, and there have been multiple attempts. We can see whenever the stock reaches 11,000, some sort of buying tends to emerge, and now it's on the verge of a breakout from its swing high around 11,500, 11,550. So we expect, at least with a short-term view, we expect this stock to surpass this hurdle, wherein the next important cluster to watch out for would be around 12,000, 12,200. So overall, yes, chart structure looks promising. Once the breakout happens beyond 11,550, this stock can certainly head towards 12,000.
All right, that's Ultrex Cement on the charts. But moving on to the news piece about the geopolitical tensions that have been building. Iran renews its missile attacks on Israel. We'll get you more updates on that story, but before that, let's slip into a short break. We'll be right back with more updates on the other side.
पैसा लगाना